The student loan debt crisis is looming large over the country's economic landscape. With over $1.7 trillion in outstanding student loans, this issue is affecting millions of people across the nation. The burden of student loans can be overwhelming for individuals, impacting their mental health, career opportunities, and personal finances. But the consequences of student loan debt extend far beyond the individual level. It's impacting families too, with intergenerational debt transfer becoming an increasingly common occurrence. And it's not just families, the broader economy is feeling the effects of this crisis. With the burden of student loan debt, people are unable to spend as much money on other things, which can have a ripple effect on the economy. The housing market is also being impacted by this crisis, with many young people unable to afford homes due to their student loan debt. It's clear that something needs to be done. The future of the US economy depends on it. We need progressive solutions that prioritize the well-being of individuals and the health of the economy as a whole. In the past, higher education was funded by the government, with grants and scholarships available to those who qualified. But as time went on, this system began to change. With the rising cost of tuition, many students found themselves struggling to pay for their education. Banks saw an opportunity to step in and began offering private loans to students. These loans quickly became a major component of higher education, as more and more students turned to them to pay for their schooling. And while the shift from government-funded education to private loans may have seemed like a good idea at the time, it has had serious consequences for students and the broader economy. For many students, the burden of student loans is overwhelming. It can impact their mental health, their ability to find jobs, and their overall quality of life. But the problem is much larger than individual students. The rise of student loans has created a system of debt that is holding back an entire generation. The dark side of student loans is the toll it takes on individual borrowers. For many students, the burden of student loan debt can impact their mental health, leading to anxiety, depression, and stress. It can also impact their career opportunities, as they may be forced to take a job they don't want or delay starting a family or purchasing a home. And it can also impact personal finances, as the high monthly payments can make it difficult to save for retirement or emergencies. But it's not just individual borrowers who are impacted. The impact of student loans can also be felt by families. Student loans are often taken out by parents or grandparents to finance their children's or grandchildren's education, leading to an intergenerational transfer of debt. This can impact the entire family, as the burden of paying for the loans can strain relationships and make it difficult to plan for the future. Although, the impact of student loan debt isn't limited to individual borrowers and their families. The economic impact of this crisis extends far beyond personal finance. One major impact is on consumer spending. With high student loan payments, many borrowers have less disposable income to spend on other goods and services, which can slow down economic growth. This reduction in spending can also lead to job losses in affected industries, creating a ripple effect that can harm communities and the economy as a whole. The impact on the housing market is also significant. With high levels of debt, many borrowers struggle to save for a down payment or qualify for a mortgage, which can lead to a decline in home ownership rates. This decline can harm the construction industry and related sectors, leading to job losses and less economic activity. But perhaps the most insidious impact of student loan debt is the role it plays in creating economic inequality and hindering social mobility. Those who are forced to take on significant amounts of debt to pay for higher education are at a disadvantage compared to those who don't have to worry about such financial burdens. This inequality is particularly stark when it comes to the distribution of wealth, as those who are burdened by debt are less likely to accumulate wealth and more likely to struggle financially. This can make it more difficult for individuals to move up the social ladder and achieve the American dream. But the student loan crisis is not only an economic issue, but a political one as well. The policies and decisions made by our government have a significant impact on the lives of borrowers and the overall state of higher education. Federal and state policies have played a major role in shaping the student loan crisis, including the decision to shift from government-funded education to a system of private loans. This shift has resulted in a system where private lenders have a significant influence on the terms and conditions of student loans, often resulting in high interest rates and fees that make it difficult for borrowers to pay back their loans. The student loan industry has also played a role in shaping policy, with lobbyists and industry insiders pushing for policies that benefit their bottom line rather than borrowers. This has resulted in a system where many borrowers are left struggling to make ends meet, while the industry profits from their financial struggles. However, there is hope for change. Advocates and policymakers are pushing for reform, including debt cancellation and policies that make higher education more affordable and accessible. By holding our elected officials accountable and pushing for meaningful change, we can create a system that works for all students, regardless of their financial background. We can create a system that prioritizes education and invests in the potential of every student, rather than burdening them with debt that will follow them for years to come. And we know, the student loan crisis may seem overwhelming, but there are solutions that can help alleviate the burden of debt for borrowers and create a more equitable system for all. One alternative approach is to increase public investment in higher education, providing students with access to affordable education without the need for loans. Grants and scholarships can also be used to help cover the cost of tuition, reducing the need for loans and making higher education more accessible for all students. For those who have already taken out loans, there are potential solutions like debt forgiveness or restructuring that can help alleviate the burden of debt. These solutions can help borrowers get back on their feet, allowing them to invest in their futures and contribute to the broader economy. Advocacy and activism can also play a role in creating change by pushing for policy reform and holding our elected officials accountable. Now to wrap up the video, the student loan crisis is a ticking time bomb that threatens to undermine the future of the US economy. As we've seen, the consequences of high student loan debt are far-reaching and affect not only individual borrowers, but also the broader economy. We need to take action now to address this crisis, to create a more just and equitable society for all Americans. The good news is that there are solutions that can make a difference. By investing in education, promoting policies that make higher education more accessible and affordable, and advocating for debt relief, we can help lift the burden of debt from millions of Americans. We need to hold our elected officials accountable, to demand policies that prioritize the needs of everyday Americans over the profits of the student loan industry. The future of the US economy depends on our ability to invest in the potential of every student, to create a more just and equitable society, and to build a brighter future for all. We will see you in the next one. Take care and bye for now.